want to mark what the SGX Nifty is doing because, it's a remarkable recovery that the SGX Nifty has seen. When we started off the show at 7:30 this morning, we were quoting a little soft when it came to the SGX. And look at where the SGX Nifty is already, as only a 44-seat count is out. But then again, the leads are indicating that it is a solid NDA victory or solid NDA lead. At least that is what the leads so far seem to be indicating. So there you go. That's the seat share as well in a couple of key states. Maharashtra, for instance, again, that's also where BJP seems to be in the lead. So is the case with Madhya Pradesh as well, after a total count of about almost 5 seats right now. So that really largely seems to be the trend, much in alliance with what the exit polls were already indicating on Sunday evening. But let me welcome on board Nilesh Shah from Envision Capital, and I've also got Sunil Subramaniam in the studios right here. Nilesh, hi, good morning. Already a move of 4% is what the index has seen. A massive thumbs up to the exit poll on Monday itself when we clocked at 11,800 plus fresh highs. Do you think the best is already in the price?
Very good morning. No, I don't believe the best is in the price because clearly we were already at these kind of levels, in a month back, sometime around April. What it looks like is that we've just kind of recouped or recovered some lost ground versus where the markets were in April. So clearly believe that if the exit polls were to be proven right, then clearly what that indicates is complete removal of the political uncertainty and heralding in an era of stability, and that we believe is going to be a very, very strong case for reforms to get pushed further and drive earnings further. So what we clearly believe is that yes, in the short term the markets might have some resistance around the current levels, but clearly the best is yet to come.
Because that seems to be, the narrative we're starting to pick up across the board, that perhaps we're underestimating the power of sentiment, the power of stability here.
I would agree very much with that view, purely because also what Nikun said, right? The price of the Sensex or the Nifty is not reflective of all those industrials, infra. So if you look at a broader market like an NSE 500, you'll see a lot of the gains happening there. May not reflect in the top line indices, but the broad breadth you will see will be very, very firm and strong.
Sure. So when you're talking about that broad breadth, I just want to get a sense, because there are big concerns about earnings recovery as well. And as Nilesh just mentioned, it may take a while really to see that pickup coming in. How do you see things panning out? Because, with this sense of euphoria that we've seen pre-result or just in the last few sessions post those exit polls, a lot of investors are starting to expect some kind of fabulous returns in a very short term.
Is that for me?
Yeah.
Yeah. So the key element there I would say is that markets very often say that you are a slave to earnings and you have to follow earnings, but very often markets are the lead indicator to earnings. Right? Markets are impatient. Markets don't want to wait for the reality. They want to predict the reality and bet on it. So I would say we are going to enter a phase where your actual earnings may take time to pick up, but the market is going to be on a very strong and firm footing, saying this will ultimately happen, and I don't want to be the last one on the boat.
Okay. Right, Nilesh, we do have seen this, really long drawn out, momentous really election that's played out over 7 phases. But I don't think anyone is really factoring in what would happen as an outcome if we weren't to see the election, the exit polls true. How do you believe the markets would react to that?
Well, if the exit polls, whatever the exit polls have predicted or forecasted, if they don't turn out to be true, then obviously that's not a situation or a scenario for which the markets are prepared for. Clearly the markets are predicting or forecasting or expecting clearly a win for the NDA and the government continuing into the second term, and if that were not to happen, I think that will come as a jolt or some kind of a shock to the markets. and there could be a correction. And clearly, I think there is already history. If you just kind of peek back into history, 2004 was a similar scenario where the markets had predicted an NDA or expected an NDA victory, and it didn't happen. So there was a knee-jerk reaction, there was a jolt, and then of course it's back to kind of trying to imagine what the scenario could be and who could be forming the next government. So yes, I think if the exit polls were not turn out, if the reality is not as per what the exit polls have forecasted, I think clearly believe that's not what the markets are prepared for, and that would result into some kind of a jolt or a shock to the markets.
All right, so Nilesh, we've been asking everybody these three big questions, trying to get a poll going today and a consensus. I think you've already answered the first, that the market is counting on that NDA win. The second one is, what's the kind of upside you see today? Should we get that reformist government back in power? 2%, 5% or 10%?
The Nifty would try to obviously brace itself for 12,000. If the exit polls were to turn out to be true, the markets will definitely try to push itself up towards 12,000 on the Nifty. But again, I'd say that, really don't be focused on the short term. I think there'd be a lot of people who try to kind of prepare saying, okay, if the verdict were to be turned out to be true, let's do some profit booking. But keep in mind, 5 years back, the markets were at 7,200, 7,500 when basically the NDA government won that point of time. And today we are at almost 12,000. So kind of keep your eyes focused really on what could potentially unfold over the next 5 years and not what would potentially unfold over the next 5 hours.
Okay, Sunil, why don't we get in your perspective on the same in terms of what the Nifty upside would be? So far, the consensus is that we could see 12,000. That would be about 2% if we see a stable reformist government come to power. Are you jumping on the bandwagon as well?
Yeah, I'm actually closer to the 5% because I think there's enough juice left. Because that day it was more like a FOMO rally, right? A fear of missing out. Everybody was just going. But this one will be a clear direction of future growth. So I would say a lot more longer term participants would commit money if this result comes through.
Is that if you look at what NDA won or what markets have done during NDA 1, Sunil, we've not done better than US markets. We've not done better than any other major market. In fact, we've done exactly what other markets have done. So despite a very clear positioning of NDA 1 in terms of a promise and in terms of a, in terms of a commitment and in terms of a commitment to take India to a future land or a promised land, the markets have just mapped S&P, that's it.
See, part of the reason for that is that December 2017 was a break point. If you see the markets run up from December 14 to 17, it was a fabulous run. At 2017, there was this re-rating of the world, there was this issues, crises happening. That took away a bit of the returns, and especially in a broader market sense. So I think now what I'm saying is you will see that the next 18-24 months will see that kind of rally. And then if the thing follows through, see there was in the second half of the tenure saying a lot of the programs which the Modi government started haven't been followed through. They've messed up the GST implementation. Demon was more hope than reality. Similarly, markets will give the government a cushion, a free run for the next 18-24 months to continue on those programs. And again in the second half of this tenure, there would be the report card and the reality check, is all this happening or not. So I think that you can brace yourself for a very good rally for the next 18-24 months. And then what at the ground level, job creation, all infrastructure creation, private sector capacity creation, all of those things start on a good wicket, then the rally can sustain. So I would say that that's the reason, one. Second is at the beginning of the tenure, US was in a recovery mode. The reason the US markets outperformed because at that time they were bullish on the US. December 17, again the US thing turned back. So the returns from the American market were a function of US growth being very strong. Today the situation is different. Today you are going to see a situation where the American economy is not looking so great. So that liquidity is going to come in and strengthen domestic flows. So I would argue that we are actually in a much better position to deliver better return in the NDA 2 than in NDA 1.
Okay, Nilesh, do you think the narrative of the market, which in a sense has been tilted towards consumer, little bit of pharma and lot of IT, post the NDA 2 verdict, and if it's a clear verdict, will change? I mean, it makes sense to go back to, let's say, buy an L&T or a BHEL or an NCC or an IRB, because in the last 5 years, Nilesh, With the exception of L&T, none of the infra stocks have given you great returns. None of the cyclicals have given you great returns. They had debt issues 5 years ago, but in last 4 or 5 years, some of the companies have genuinely reduced their debt and profitability has gone higher.
Well, clearly, I think from an India standpoint, it's going to be always consumer and financials, which will always have to be the core of any portfolio, because these are structural growth opportunities, irrespective of who's really in power. And then, of course, you can top it up a bit with technology, because there are some niche opportunities. Yes, clearly the rate sensitives, economy sensitives, infrastructure, engineering, materials, they have been laggards and huge underperformers over the last 5 years. But clearly, if we really look at it, if the focus of the next government is going to be on hard infrastructure, then I think it's going to be difficult to stay out of that entire pack of engineering, materials and manufacturing. And yes, I think it would be time to kind of be positive and constructive on that piece of the opportunity in the Indian equity market. So clearly, I think if the exit polls were to turn out to be true, we have NDA 2, then it's time to kind of be a lot more constructive towards that segment. Of course, the underlying has to be quality, that even in that pocket you cannot compromise on quality. So I think stay with quality in that pack, but be constructive about that.
All right. Nilesh, thank you so much for joining us on the show today, and Sunil, thank you as well for your views. It's an exciting morning and we wait to see how it unfolds.